So average days on market last year was 14 days. We're now up to 28 days. So still less than a month of inventory, but it's up 100%.
That's quite the headline.
It's quite the headline. Yep.
Yeah.
This is something buyers should pay attention to, because right now sellers are confused, right? We're still coming out of that. My house should sell in a weekend. And when it doesn't, they get scared, right?
Mhm.
So it's a great opportunity to put in an offer that might be under list price or with some concessions, because we haven't normalized the days on market yet.
What's up, Colorado? Chris Lopez here, and we have the October trends updates for Denver and Colorado Springs. We're going to go through the stats. We're going to go through some ADU updates and news. We're going to talk about interest rates. We're going to talk about rents, and we're going to talk about some year-end buying opportunities as well. We're recording this right before Thanksgiving, so there are going to be some Black Friday sales and new builds and rentals around town, and we will talk about that. So I've got my panel today. Preston Newberry, how are you?
I'm doing great, Chris. Thanks for having me on.
Stacy Rozansky, how are you, Stacy?
Doing good. Excited to be here.
And Jenny Bayless, how are you, Jenny?
I'm doing great. Thanks, Chris.
All right, so I think everyone knows them, but if you don't, they're all Envision Advisors agent. Preston and Stacy are up here in Denver. Stacy's our in-house ADU expert, and Jenny does our Colorado Springs and Pueblo investments down there. So we have the crew in here.
And we've got Jenny up here in person.
I know.
It's nice. Yeah.
Let's drive up north, huh?
Yep.
So since you made the drive, Jenny, you get to start off with the stats on what's going on down south.
All right. Well, I think the best way to describe it is roll the dice, and that's probably what you're going to get for this month. So kind of the key highlights is that new listings went down from month over month, and it was down from year over year as well. Sales went down marginally, in my opinion. Stats wise, it was 15%, but in reality, it's 200 units. So, it's all relative. And then interestingly enough, median sales price went up about 1% month over month. And it's up year over year, still 4%. So very interesting combination of stats. Not quite what I was expecting. I was thinking that
Kind of a mixed bag there.
Yeah, I was thinking sales were going to be down a lot more, and I was thinking median sales price is going to be down a lot more. So I don't know.
I wonder if we're any just a couple of big sales that dragged it up, or
I don't know. It was hovering. It did drop last month over month, a little bit. So I think that is just kind of teetering, like really holding steady, honestly, in the grand scheme of things. So I just found that interesting.
Okay.
Yeah.
And if you guys want all the details and numbers, we don't go over them in the podcast anymore, so we don't put you to sleep while you're driving. Go to the blog post. We have all the stats on there, so you can actually go view them in detail. We like to keep this podcast more high level and like some trends, because it just gets too hard to go through a bunch of numbers and stats.
Mm-hmm.
Preston, what's happening in Denver?
Lots of craziness going on up here, Chris. Big thing that I noticed was we have 115% more listings this year than last year. But to kind of put that into perspective, that still only gives us 7,300 current listings, which is about half of what we would consider a balanced market here in Denver. So there's a ton more listings, but still not enough to really move the needle a ton and put it into a complete buyer's market. So there's still opportunities out there, but I think, just looking at the market in general, we've got a lot more to choose from. So buyers are able to be a little bit more picky in what they're going after. The other thing I noticed is...
sorry, before you go on there, because I don't know the exact numbers, but I think the inventory level is pretty close to where it was back in 2019 when rates were drifting up some, right?
Yeah, so the last normal market we had was about 8,600 active listings in 2019. So we're creeping back up there. We still have a few thousand units to go, but we'll kind of see how things play out for the rest of the year.
Yeah, so even though inventory is way up relative to COVID, it's about normal where it was.
It's about normal for 2019.
Ago.
Yep, exactly. The other interesting thing I found is we're down 40% in closed units. So there's definitely less activity going on right now, even with the increase in inventory on the market. So I think that just goes to say, hey, buyers, if you're ready and willing and able, now's a great time to get out in the market and make something happen, because there is opportunity out there for sure. But the other nice thing is that we're still up 8% year over year for average price. So the market is still moving along, but we just have a lot more to choose from right now.
I find that interesting that your new listings increased so much and Colorado Springs went down.
That's what I was interested. We were talking before the show, and that was one of the things that
Yeah.
kind of clicked with me. I was really surprised to see that we have so much more inventory increase up here than what they have in the Springs, especially for the Springs being a smaller market.
Yeah.
So
Any guesses as to why? Like, I have no...
I could
I
not
couldn't even
wager a
begin to
guess.
speculate on that one. Yeah.
You make something up, put a good story to it.
Maybe military moves.
Uh,
I don't know. Like maybe everyone's settled.
Huh?
They do more in the summer.
I think
I'm
one of the
just
other
making
things
that
that's
up.
added to our increase in inventory here in the Denver market is a lot of the new build stuff that's on the market now, whereas before builders were not putting a lot of stuff on the market, one, because they didn't have to, and two, it was flying off the shelves. And now we're starting to see a lot more new build product in the MLS, whether it's from agents or builders or whatever the case is. So I think that'll definitely have some effect on what we see for the inventory levels as opposed to what we would normally see, out there in the world.
So you're seeing the builders put a lot more of them actually in MLS now?
Yep.
Okay.
And especially stuff that maybe they had under contract and wasn't in the MLS, and now buyers backed out or had to walk away from them. Now they're back in the MLS is like, hey, these are new, built, ready to go. And builders are definitely going to be wanting to get those off the books before the end of the year.
So our MLS actually has a comparison between existing homes and then all homes. Does the Denver MLS do that as well?
It depends on how it's put in, because sometimes the builders are now reaching out and using agents to put them in because they're obviously not licensed to put stuff in the MLS. So it kind of depends on how they're put in the MLS and, kind of garbage in, garbage out kind of thing. So it's hard to tell sometimes, but there's definitely the ability to search for new build home communities, but sometimes they're not always listed there.
Okay.
The other interesting stat I thought that was kind of cool was that we're up 100% for days on market here in the metro area. So average days on market last year was 14 days. We're now up to 28 days. So still less than a month of inventory, but it's up 100%.
That's quite the headline.
It's quite the headline. Yep.
Yeah.
I think this is a great stat because this is something buyers should pay attention to, because right now sellers are confused, right? We're still coming out of that. My house should sell in a weekend. And when it doesn't, they get scared, right? So it's a great opportunity to put in an offer that might be under list price or with some concessions, because we haven't normalized the days on market yet.
Yep, I agree. And I think that that's one thing that experienced agents and people need to be talking about with sellers and buyers both is like, hey, these are the new conditions. Like, this is our market again, right? We have to be realistic with what we're doing with pricing and expectations on when it's going to sell and stuff like that.
So Stacy, kind of shifting out of the stats mode into ADUs. And as we were spicing things up with the monthly market updates, for a while, you and I have been doing a bunch of ADU podcasts. We've done some ADU market updates and realized, you know what? Let's just throw it into this month's because it's updates, it's news. And then you brought us a couple bullet points. So what is going on in the world of ADUs?
Absolutely. Do you want the good news or the bad news?
Bad news first.
Bad news first. Permitting ADUs. Everyone knows the city of Denver has long waits in their permitting department. The last update I heard from one of our builders is 280 days to get a permit for an ADU.
And you can only bet that that's going to increase.
So bad news is they're still taking a long time to get built.
I mean, so 3/4 of a year to go out there and just get the permit.
Correct.
Wow.
Yeah, they're really backed up.
And that's provided you don't have to go back for revisions or tweak anything with your permit plan.
So I know you do some new build stuff, Preston. I know all across the board, all I hear is people not saying very nice things about the length of time.
Yep.
Is that on par with, in general, what you're seeing with some of the new construction stuff you do?
Yeah, it is. I mean, you're pretty much between any of the metro counties, you're looking anywhere between 6 and 12 months to get permits for anything. And that's provided once you submit everything that it's 100% good to go. If they come back with revisions or anything like that, you can count on another at least 4 to 6 months.
Really?
Yep.
Okay.
Because you basically jump back in line.
All right. All right.
All right,
so-
bad news out of the way.
You got good news, Stacey?
I got good news.
Give us some good news.
West Highlands was the newest neighborhood to pass the neighborhood-wide rezoning to allow ADUs neighborhood-wide. So that makes it the 8th neighborhood to get approved in Denver, and that it adds about 3,200 more lots available for ADUs to be built on.
That's awesome.
So what exactly does that mean? So I know we've talked about it, but they pass it. What does that mean from a practical level for homeowners and investors?
It's just one less step in the ADU building process. They no longer have to submit to rezone their property. They can just skip that step, which again is time and money. So it just makes it that much easier.
Right.
So on that note, the ADU Community Advisory Committee that's through the city of Denver, they're sort of just wrapping up. I think it was 7 or 8 sessions. Their last meeting is on December 8th. It's on Zoom. It's at 4:30. If anyone who's interested should tune in just for education. They're going to be kind of going over their proposal that they've, compiled all the input from different neighborhoods and committee members. And then they're going to be submitting this proposal to planning board and city council. What I will say is, if you're someone that lives in a suburban neighborhood in Denver and you want to see ADUs, your council people need to hear from you, because from my interpretation of these meetings, that's where the most pushback is. Their ADUs will be most likely allowed everywhere, but they're putting more restrictions on suburban neighborhoods than urban neighborhoods.
Why?
I think it's just the way they were originally catered. They're larger lots. They're not on alleys. People want more privacy in the suburbs. But my opinion is, and don't quote me on this, but I don't, you're allowed to build an ADU in Arvada or Littleton, the actual suburbs, and they don't have as strict of restrictions as they might be proposing for the suburban neighborhoods of Denver. So
is a lot of the pushback coming from, I guess, the owners in those neighborhoods is kind of like the typical, like, just NIMBY stuff, not my backyard, like?
That would be my guess, and that's who the city council people are hearing from, right? So they're representing their constituents. So if you're for ADUs and you live in one of those neighborhoods, that's why I'm saying reach out to your council.
Get your voice heard.
Reach out to your council members. They're also going to put this proposal. It'll be public, and there'll be public comment. Like I think they said, for a whole month, you'll be able to, voice your comment on their proposal. So take action.
Do you know much about the proposal and what's in it? Is there anything kind of jaw dropping or anything, really crazy about it?
Not really.
Okay.
It's mostly kind of talking about, relaxing a little bit of the standards. I think there's a real push for one level ADUs. I think where a lot of people get upset is the taller ADUs that's looking into someone's backyard, and just figuring out that all the lots in Denver are different, right? So we can't necessarily have this like total
this
one
cookie
standard,
cutter, yeah.
Which makes sense. So they've been very thorough. But my takeaway was, these suburban neighborhoods are definitely, it's going to be harder to build one in a suburban neighborhood.
ADUs in Colorado Springs, Jenny, there's nothing like going on down there like we have in Denver, right?
No, and to be honest, I don't really know a whole lot about it, just because it's not really anything that too many of our clients have inquired on. I know that there are, building regulations and, code requirements and all that, but yeah, the most
just hasn't been a hot topic down there.
It really hasn't. Yeah, I've just heard of a lot of people like converting garages or things of that nature. Just yeah.
So for that ADU planning session, are you going to go to that, Stacy?
It's all on Zoom, so you can just tune in on your
That wasn't my question.
computer.
I want the Cliff Notes.
Oh yeah,
I want the
I will
Cliff
tune
Notes for
in.
me and the podcast
Yes.
listeners, because that's what I like.
I will tune in and report back.
Awesome, thank you.
Right
on. All right. Any other ADU updates? I know you said that was it, right? Okay, cool. So bad news, good news, good news.
Mm-hmm.
All right. So, you guys want to talk about buying opportunities, rates, or rents first?
Let's talk about rents.
All right. Well, you start off. You took the bait.
Yeah. Seeing a lot of headlines out there right now about rental rates dropping across the country. We haven't really seen that much here in Denver. I think things have been steady with, a slight increase, not what we kind of expected, especially over the last year or so. But we're seeing a lot of headlines right now about rents dropping across the country over the last 3 months.
And Stacy, I know you some anecdotal stuff. Can you share what you happened with your rental in Centennial?
Yes. So I rented it out in June.
Of 2022.
Of 2022.
Okay.
And then something happened with my renters where they had to move states. I think their jobs got transferred. So when I ended up having to put it back on the market in October, November, I definitely wasn't seeing any traction at the same rental rate. So I had to drop it like a few $100s.
Can you share the numbers?
Yeah, it was rented at $3,850 in June, and now it's renting for $3,500.
And this is pretty standard single family house down there, right?
Yeah, it's a big house. I mean, it's 5-bedroom, but single family,
Okay.
garage and all that stuff.
So about $350 in rent drop.
Mm-hmm.
Now, obviously, like we talk about prices with seasonality, rents have seasonality as well. There's a lot less data out there tracking that, since rents are not public like sales are. Do you have any kind of like sense for, are rents dropping? Is it seasonal? Or did you just also combination of like you just leased up at the right time, higher rate? Like, how do you interpret that type of rent swing?
That's the feel I got because like when we rented it in June, there was a ton of interest and, multiple people applying. And this was like crickets when we listed in October. So I felt like time of year had a big thing to do with that.
Yeah, I mean, my gut says that would probably be the biggest driver. I mean, with interest rates going up, we know what that does. It knocks people out of the buyer pool, which just puts more people back into the renter pool. The last 4 months, there's been no like magic, something where they're dropping a bunch of rental units all of a sudden in Denver Metro. To me, the biggest variable is just like seasonality on there.
Yeah, people don't want to move when it gets colder and closer to the holidays. And
Preston, what about your, you recently converted your Nomad townhome to a rental property, and you were talking about kind of lease up for that. Can you share that again?
I mean, unfortunately, I had previously kind of timed this to be out of there, hopefully at the beginning of summer, kind of June, July-ish. But my new build didn't get completed until the middle of October. So
what a surprise.
Yeah, weird, right? So I knew it was definitely going to be a little bit of a, harder lease up to get my place leased up. We've had it on the market now for about 3 weeks, and we've only had 3 or 4 inquiries. We've had probably 10 different showings, but only 3 people have actually reached out. So, I think a lot of that is a seasonality, and we definitely listed it about $300 less than what we would have during the summer, just to hopefully drive some more traffic. So
what'd you list it at?
We listed it $2,950 or $2,995.
Okay. Do you remember what you underwrote it a year ago when you
$3,300 to $3,400?
Okay. And that was like prime time.
Yeah, that was prime time. But again, knowing we're going into, kind of the slow part of the year, I want to get somebody in there. We'll probably end up doing either a 6th or a 14 or 15 month lease, kind of depending on where we're at, just so we can time that lease to be back in kind of prime time when the lease comes up again. But working with Eric Ross and his team over there at EcoSpace, they're awesome. So.
Yeah, that's a good thing to highlight because you're going to, probably do a 6-month lease, or you said a longer lease to time it back in that spring-summer cycle. And Stacy, I think you said this before we hit record on here, when you signed your new lease, you put them on a 18-month lease, right?
Yeah, I did the same thing.
Yeah. And this is like a very important thing. Like even before interest rates went up, if this was a year ago, 2 years ago, 3 or 4 or 5 years ago, and you're going into like holiday season, rents are always lower.
Demand is lower.
Yeah, demand's lower. Vacancies are higher. That is very typical of the seasonality of there. And that's always been the play. Like, hey, cool, if it happens, whatever. It's still better to rent it out versus sit vacant for 6 months.
Exactly.
Drop a few $100, rent it out, but be smart about it and do a shorter lease or a longer lease and tee it back up for the right time to lease it up again.
Absolutely. Yep.
Any rent news or updates down south, Jenny?
Just my personal anecdote for I had one unit that came open and we raised the rent. So the person that was in there before, she was paying, I think, $900 a month, which is very low. And then we ended up raising it $200 a month. And it did take a bit longer to get rented, probably about a month. And there's a lot of interest, but not a lot of qualified applicants, which I thought was interesting feedback on that. So yeah. So it's definitely slower because normally things in the springs go very, very quickly, especially at that price point.
But even with like seasonality, like it does it feel slower than normal this time of year? Or
yes.
Is that okay?
Yes. Because like to give an example, I had a single family home last year that went open around Christmas time. So we rented it out, I think, the 2nd of January or something like that. And it went within a few days, which, I mean, who was shopping?
Who would have thought that,
on New
right?
Year's? Yeah. So, yeah, I thought that was an interesting change, especially at that price point. I would imagine that there would have been a lot more interest.
Yeah. Well, we're going to have to get some property managers up here in Denver and Springs kind of get what their,
for sure,
their stats are if we can get them away from actually running the business and managing people's properties. Be good to get their insight and data on there. Mm-hmm. So rents, like I said, seasonality, and it sounds like maybe a little bit slower than normal. Mm-hmm. But like I just where are people living? That's what I kind of go back to. It's like, where are people living with this? Because I mean, buyer pools drop down. There's been no influx of rentals. Like, what is?
That's my concern, honestly, is the unknown related to that. Just in the sense, are people combining generations? Are they?
I think a lot of people are combining households right now.
It's just, that's an interesting concept. And I don't think there's a lot of information on that, and it makes things very hard to gauge where things are going to go.
Yeah. I mean, I definitely could, what happens in rough times, people get a roommate or, they live with, mom and dad, kids, or whatever it is.
Mm-hmm.
Yeah. Be interesting to see how that plays out. That takes a while to get that data.
Yeah.
Yeah.
All right. So, I mean, on some good news, rates plummeted, which is a good headline, but let's be, relative here. They peaked about 7% a little bit ago. And then, of course, right now, the bond market and rates are kind of a little bit of a roller coaster.
That they are indeed.
But you were just saying you talked to a lender earlier today, Preston, and
yeah, I mean, they're down to mid to low sixes, and, you can even buy the rate down under 6% right now for, point and a half. So, definitely some movement in that market. We'll see how long it lasts. But, like Chris said, it's kind of a roller coaster right now. But if there's opportunity there, take advantage of it.
Woohooing for a 6% interest rate, huh?
Yeah.
How times have changed.
Hey.
But like talking about that, like, this is, rates will probably continue to bounce around, every month a CPI comes out and all that. So that's going to change a lot of things. Rates will go up, rates will go down. But an important thing to talk about is the opportunities out there right now. Again, we're talking for longer
This
term
is all
horizon
long-term,
investing, not like, hey, come in here and not trying to time it with the perfect time of the market and sell in the spring, or trying to time the perfect time the interest rates drop, because that is very much a fool's game. But there's opportunities, and there's opportunities on current inventory and opportunities for some new construction stuff.
Yep.
And you were talking new construction earlier, Preston, about how builders are starting to put them in MLS more, which means they're getting less traffic and they're needing more eyeballs.
Yep.
They're being nicer to real estate agents.
They're being much nicer to real estate agents now. Yep.
Yeah. So kind of peeling back the onion some more, what are you seeing on the new build side, and what's going on there, and any type of like opportunities?
Yeah, absolutely. I think there's a ton of opportunity. I think that's one of the biggest places right now to find some opportunity, from what I'm seeing anyways, is, builders are going to have some inventory on their books come the end of the year, and they're really going to want to get rid of it. And I think that there's some opportunity there, whether that's, working with them to get some seller concessions or get some additional benefits in the house, whether that's finishing some things or getting appliances or whatever the case may be. I think buyers have a lot more bargaining chips to work with now, just because there's so much opportunity before the end of the year to work with new build stuff. And especially if it's properties or projects that, they've already got up and running and they're vacant and ready to go,
Are you seeing any like differences? Because I think in new builds, as there's a bunch of like the 10 or 20 townhome developments that are infill in Denver, Wheat Ridge, Arvada, and then you have like the giant communities out out by the airport or up north. Like, are you seeing differences on there in terms of like?
I think they're both hurting.
Yeah, they're both hurting. And it's across all the different builders that we're seeing. I mean, you go out, especially out east, you go out to these bigger communities where, there's 5, 6, 7 different builders out there, and now they're all having to compete with each other along with, buyers, and trying to get their attention and get stuff, sold and under contract. So I think that it's pretty much across the board.
Because one thing I think that happened was a lot of these buyers, they signed up for these houses in spring, right? And so they were expecting to buy them at a certain interest rate, and now that's not available. So they're losing a lot of contracts. And then on top of that being like offloading end of year stuff. I mean, I think I saw a listing the other day that just said, name your incentive.
Yeah.
Literally, that's what it said?
Yeah.
Wow.
Did they give you a list to choose from? Or?
No, it's wide open. So definitely think there's a good opportunity in new builds.
Yeah, and like you said, there's a couple factors going on. Like a lot of contracts are falling out, demand's died off, and plus the way a lot of times, if you always kind of go back to, follow the money, new construction, it's all being built on loans, and they have various things, and they usually have quarterly and year-end deadlines, and they want to hit their targets so they can, get the next round of loans or free up that loan and do things. And so between the seasonality, the lack of demand, and also,
interest rates,
year-end,
yeah.
I think there's good opportunity in there.
I would agree. Are you seeing that in the springs at all, Jenny?
So we don't work with a ton of new builds. We do have, a decent relationship with a townhome new builder that we've spoken about on the podcast a few times. And I've been made aware that the builder, the seller, has pre-purchased loans, essentially, from what I'm understanding, to the point where they figured out that it was easier for them to buy down rates at a bulk discount than for them to lower the price. So they're able to offer some pretty decent rate loans
Options,
if you go with their preferred lender. So I thought that was kind of an interesting concept, as opposed to they don't want to drop the price. They want to incentivize via financing. So yeah, but yes, to answer your question, I am on a lot of,
email lists,
like,
yeah.
hey, free lunch, free breakfast, free coffee for
Yeah, we're
for
talking about that.
Just come talk to us, please.
Yeah, so I think there's a lot of that going on.
Are there any Sunday brunches with bombless mimosas
Yes.
that we can go out to?
Yes.
There's some interesting.
No, you're kidding, but
options,
I'm not.
yeah.
There's definitely no. That's a thing. Yep.
Oh, it's amazing.
Houses
how,
and
like,
mimosas, man.
Yeah.
It's amazing how times have changed. So here's a question I get a lot. I'm sure you guys do as well. And I don't know the answer. But hey, there's concessions right now. There's, the pendulum has swung. Is it, hey, take advantage of the opportunity or wait longer and see what happens? Like I
think it goes back to the crystal ball that we always talk about that we don't have. I think if you're ready and, have the opportunity to do something, go when you're ready, right? Don't sit around and wait. Yeah, things may get better. Things may get worse. We never know. But, again, like we always talk about, it's a long-term play, and that's what we coach with all of our clients. So if you're, in a position to make something happen, find the best deal that you can and move on with life.
Yeah. If it works today, generally speaking, it should work in the long term.
Yep.
And I think the thing I think about is we don't know what the thing will be to shift the market again. We have really short attention spans and forget how hard it was in the spring for buyers. And so, yeah, there are things not to our advantage, like interest rates are higher, but we're still, like you said, we're still short on inventory. And so if rates do come down, all those people are going to come out of the woodwork, and then we're going to be in a competitive market again.
Which I think we're probably going to see come close to the end of Q1 or beginning of Q2 next year.
You're feeling right now?
That's kind of what I'm feeling. And, based off all the, articles you read and all the data that we have, I think that once we get through the holiday season and people are adjusted to where rates are at, we kind of, get through the first month or two of 2023. I think that, there's going to be a lot of people coming off the sidelines.
Yeah, I'm so eager to see come around like, mid-February or so as,
Yep.
Things should be heating up, like how things are. Because I feel like that'll be a really good barometer for the rest of the year.
I would agree.
I mean, this year, like it was like January 2nd. It was like everything was already popping. Like
Yep.
it was, there was no spring.
Full speed ahead.
Right.
I don't think it'll be like that this year, but more like what normally end of January, early February, things are picking up.
Mm-hmm.
Yeah, I'm very curious to see the year-over-year data, like April-ish, May-ish. I'm very curious to see what that looks like.
So just keep buying.
Well, that goes like I always really like time the market to like, when I have tried and I failed it numerous times in stock trading, all that.
Mm-hmm.
And I still like, I don't actively trade, but I put a little money away every year into the stocks. And I usually just kind of do a lump sum. And then the last couple of years between COVID and this, I will try my best very loosely, just kind of time it as the market goes down or kind of towards the bottom. So, hey, let me just kind of put a chunk in here at that time. And it's just, it's just more of a game and fun. I still have yet to time it perfectly, but I'm still like close to like, like, hey, cool, this is lower than it was. I'm happy with it. But try and time it perfectly is so hard to do in that. And real estate's harder because you can't instantly go out there and execute. You have to go under contract for at least a couple weeks or maybe 10 days.
Yep.
And then with interest
and a lot
rates,
can change.
That's the wild card too. So much that people don't think about in real estate. Oh, prices are dropping or going up, but what are rates doing? Like that has such a big impact.
Yeah, and that's the other thing, back to kind of our stats from last month. I mean, we're still up 8% year over year for, prices here in Denver. So yeah, even though all this other stuff is happening, real estate is still getting more expensive.
Yeah, it's just interesting, going back to your timing the market discussion, like I feel like every time I have bought a property, there has been some external force working against me, and I've never had like the perfect purchase. But as time goes on, I've looked back and I'm like, man, that was really good property, or, yeah, I think that is kind of
the factors that were against you when you bought it. You kind of look back at them, after a couple of years, and you're like, oh, that wasn't really a big deal.
Yeah, exactly.
There is no perfect time.
Never.
Like there is no perfect time.
Yep.
And it's not going to be a perfect situation. It'll be like, yeah, good enough. And it always goes back to if it works for you, it makes sense, go forward with it. Hey, if rates drop, cool, refi.
Mm-hmm.
If they go up, awesome, you're locked in.
Mm-hmm.
So something that I learned actually got just a few days ago, like we talked about the 2-1 buy down on rates. And I was talking with someone I was like, when I first heard it, I was a big fan of the 2-1 buy down because it really drops the payment for a while. And I was like, actually, with the expectation of rates dropping, why would you do that than refi and give it up? And I had misunderstood the program where it's actually not a true rate buy down.
It's escrowed.
It's escrowed. Yeah. I did not know this until like 3 days ago. And I was like, wow, I was wrong. Again, I'm not a lender. That's why I say always, hey, here's the idea. Go talk to the lender and he or she will tell you what to do. But I was, for it, against it. And I'm like, oh, I'm for it again because I've talked to a couple lenders and basically like the 2-1 buy down works is what you just did this, right, Preston?
Yeah,
Why don't you talk about that since you did it?
Yeah, so basically the 2-1 buy down, obviously you're buying the rate down for the first 2 years, but they put it in escrow. And so that money goes towards, your monthly payment every month to make up the difference between the two payments. But if you refi before the end of the first 2 years, you actually get refunded whatever the difference is and whatever's left in your escrow account.
Yeah.
So
I didn't know that.
Yeah.
So I think the 2-1 buy down is a poor name for it because when you say buy down points, that's usually, hey, if I buy down a point, that money is gone.
Yeah.
Right.
But that's not the case.
And this is where, hey, the money's being put in a checking account, essentially an escrow account. Your rate's the same, but if you got $5,000 in there, they're going to take $300 a month one, $300 a month two. But if you refi, that money's still in the account.
That money's still in the account.
And you'll get it back.
You get it back.
Yeah. So that was something that I didn't have clarification on. I figure probably a lot of other people didn't as well.
Yeah, that was one of the big attractive factors for me because, I have a feeling rates are probably going to be a lot different in 2 years than where they're at now, hopefully lower. But, for me, it was just a good insurance policy, right? Cool, I can buy the rate down for the first 2 years, helps me keep some cash in the bank. If things aren't better in 2 or 3 years, cool, I don't need to refi. I'm still at a decent rate, but I thought there was a lot of opportunity there depending on what happens.
So in your case, did the seller pay for the 2-1 buy down in your case? So
They didn't. The only way they would do it is if I use their lender, and their lender's rate was still more expensive than where I was at. So I just didn't feel comfortable with that, and I wanted to go with a lender that I knew and would work with. So we were able to use some of my concessions from my, being a real estate agent to go towards some of that, and it just kind of made sense.
Do you get it at a discount? So it costs X amount to do the 2-1 buy down, but the difference that's being escrowed each month equals more than that? Is that kind of how that works? Okay.
Yep.
Interesting.
And just to clarify, that is for owner-occupied properties.
Yes.
Not investment properties, but that's a very attractive thing now for people who are house hacking and nomading. And something else, I'm just been pleasantly surprised. I never thought about one of the benefits of higher interest rates is there's a lot more different lending programs out there now. Like there's margin, there's creativity that lenders can do. And it seems like every time I talk to a lender, they often have their own little unique program or spin.
There's even a 3-1 buy down.
Really?
Yep.
Okay. But even for investment programs, there's a lot of cool investor stuff out there, especially get into doing seconds or refis or HELOCs, some really cool ways to tap into equity, to go out there and reinvest or buy another property. Don't touch your cheap low debt, but put a HELOC, put a second on there. So one of the things I'm focused on now is the silver lining.
Yep.
And that's one of the silver linings in higher interest rates. Again, love it if it's still at 4%. It's not.
It's not.
But now there's options to go out there and be a little more creative.
Yeah.
So if you're out there shopping, you're out there buying, or you're out there and have rental properties, go out there and get up to speed on the latest lending programs and definitely reach out and talk to a few lenders. If you need some recommendations, we have a bunch.
Let us know.
We keep our finger on the pulse between all the deals we do, but it's definitely worthwhile to spend more time on the lending component than I'd say in the past, just because there's a lot more options out there now.
I would agree with that. And I think that that's one of the big factors that can make or break a deal right now is finding the right lending program, whether it's an investment property or owner occupied or whatever, really sit down and look at all of the options because they can move the needle a lot.
And if you're a cash buyer,
yeah,
that's a great place to be in right now.
The other thing, I was talking to another lender and she's like, oh yeah, we're closed on 10 days now, no problem. I was like, oh, well, she says, nope, no rushed appraisal. Just they're so slow. The appraisers have nothing to do. So, a year ago, 10 days was extremely difficult, rushed appraisal and all that. And now that's kind of
it's normal.
We have to hustle some, but we can do it and no extra fees or no extra stuff just because so many people along the food chain aren't as busy now.
Yep.
Definitely have the option to close fast, close quickly for the end of the year if you're financing. So keep that in mind. All right, guys, we went through stats, ADUs, rates, rents, some buying opportunities. That's all from my checklist. Any other talking points, tidbits things you've learned the last month?
Not really. I think, just kind of goes back to the theme of what we've been talking about, is that there is opportunity out there. So get connected with your agent, figure out what that opportunity is for you, because it's going to be different for everybody else. And if you're in the position to do something before the end of the year, I think it's a really good time to buy.
Yeah. And we are doing, a couple weeks ago, we did a webinar with Jeff White on 3 house hacking underwrite deals. We're going to start doing more webinars on some active underwriting, moving away from doing some now on the podcast. Just it doesn't work for the current events. But Jeff underwrote 3 house hack properties at between a 6 to 7% interest rate, so higher than they were today, and the numbers all made sense.
Yep.
Still worked out, again, not like it was a year ago, but the numbers still made sense. Like, okay, well, hey, for house hacking and turn into rental, it makes sense. So if you guys want a copy of that, reach out to us. We can share it with you. But don't just look at the headlines. Go out there, underwrite properties, work with your team, and get their opinion on there as well. Because, like I said, there are opportunities out there.
100%.
Awesome. Jenny, Stacy, Preston, thank you guys so much.
Thanks, Chris.
It's
Thanks,
fun
Chris.
as always.
Yep.
All right. Listeners out there, if you guys have any questions, reach out to us. If you need help in analyzing a property, finding a property, figuring out your game plan, reach out to us. That is what we love to do. We do it ourselves, with our clients, and we love to help you out as well. So we'll see you next month.